May profits be upon you. How you doing, folks? We are going to take a look at the FX futures for the coming week. Now, the first thing we're going to look at is the RT Money Meter. The RT Money Meter tracks the rate of change of each individual currency from a futures perspective, and we track it over a period of 15 weeks, right? And I update this every week, and we can see, how price is moving, if it's getting stronger or weaker. And that's the whole point, to put the strongest against the weakest. I rank them in terms of strength and weaknesses. And that way we can make better and more informed trades when we're choosing the pairs we're going to trade. All right, let's start with the USD. USD this week is ranked number one at 7.90. Let me turn that, let me mute that sound. All right, at 7.90, right? Last week it was at 8.39. So the US dollar seems to be trending down a little bit, just a little bit, but not much. It's still the strongest of all the currencies. And the outlook is it'll get stronger. Number two is the Swiss franc. Last week, the Swiss franc was ranked number two at minus 354. This week is ranked at minus 444. It is trending down a little bit. All right, trending down a little bit, but still one of the strongest of the currencies. All right. And number three is the euro, ranked this week at minus 679. That's the rate of change from last week, which was minus 799. That was minus 779. All right. The euro is trending up. The euro is trending up, got a little bit stronger, but just keep this in perspective now. Just because for the last couple of weeks it's been trending down, we have a little correction, doesn't mean it's not going to continue trending down, because price moves in a downtrend that way, right? So keep that in mind. All right. Number four this week is CAD. The CAD dollar, the Canadian dollar, is at minus 718, but last week it was at minus 588. Which way is that going? Yeah, it's getting a little weaker. All right. The pound is at minus 7, ranked number 5 at minus 760 this week. Last week it was ranked at minus 976. Again, this is going up, just like the euro. It's going up. All right. They're trying to stave off inflation. They're intervening out of the blue, trying to buy up bonds and whatnot and do all kind of things. Euro's talking about quantitative easing. Oh boy. All right. So this week, the yen is ranked at number 6 at minus 892. Last week, it was ranked at minus 679, ranked at 4. But the rate of change is from minus 679. The yen took a big step down. All right. That's one to watch for sure. Okay. Ranked at number 7 is the Aussie dollar at minus 892. Last week it was ranked at 814. It's moving kind of sideways, but a little down. All right. But it slid in the rankings, didn't it? It ranked at number 8 is the New Zealand dollar at minus 1034. Last week it was ranked at number 8, the bottom, at minus 1105. Yeah, incrementally it went up a little bit, but it's basically moving sideways, and it is still the weakest of all of them. All right. Now, what the ideal matching, the ideal pairing is to put one that's ascending with one that is descending, right? So, but we want to put the strongest with the weakest. All right. So what am I looking at this week? I'll be looking at, well, you'll see on my hot list. I'll be looking at US dollar matched against the New Zealand dollar, US dollar. So I'll be looking at NZD USD, AUD USD, USD JPY. Got it? I'll be looking at the Swiss dollar matched up. Now, again, this one is kind of moving to the downside, which is continuing from last week, because the Swiss was at minus 148 the week prior, right? 2 weeks ago. All right. Then last week it was at minus 354. This week is at minus 440. It's going in the wrong direction, right? But it's still, relatively speaking, stronger than these weaker guys. It will outperform the weaker guys. So I will be definitely I'll be definitely looking at the Swiss dollar, the Swiss franc, excuse me, against the Aussie Swiss, New Zealand dollar Swiss, and Swiss yen. All right. Now, I'm definitely going to be taking a look at pound USD and euro USD, but because they're gaining in strength, we got to. I'll probably want to look at that on an intraday trading type of basis. All right. And the CAD, being that it is kind of weakening, we can watch what it correlates with oil and see that market, the oil prices came down a little bit. And but I feel that they're about to swing back up. So that's something to watch. So let's take a look at the actual futures, the individual FX futures, and we can see clearly how strong or weak they are. Let's look at the US dollar. All right, we're going to do this real quick because it's not a whole lot to look at. If we go to the US dollar, the Dixie, right? The US dollar index. All right, on the monthly, you can see month after month, it's been a bull rally. Too easy to see. A lot of blue candles there, right? On the weekly, we can see for the last month or so, it's been bullish and then moving sideways, right? All right, we moved up, came back down, then moved sideways. All right, didn't really lose any strength. It just breathed. Just all it did was breathe. If we go to the daily, if we look at the daily, we can see what that breathing means. All right, this is the swing low. This is the swing high, right? Price pulled up, pulled back, and now we move to the side. And for this past week, we can see the bullishness start to come back in. The buyers coming back in to move price up, and I feel the price will continue higher, and we'll look to head towards that high. Okay, that's my outlook on that. All right, let's look at the Swiss franc. All right, the Swiss franc, it's weak on its own. Again, if we bring back the RT money meter, you can see, it's moving kind of weak. And I'm going to show you how it's weak. It's weak on its own. Just looking here, you can see we made these higher highs, higher lows, higher highs, higher lows, and then we started to break internal structure there to the downside. All right, finally taking this low. So this means the market is bearish, but it's still internal structure. We haven't broken the swing high, the swing low yet. This is the swing high, the lower high, and I'm expecting a lower low to be made. And price is taking its time to get down here. We can see that we've broken market structure again here, right? So yeah, it's getting weaker again, and we've hit the target that I set last week. All right, so that target goes, and I'll be looking at this target down here, but this is the first target. All right, and we're very close to getting that. This is a demand zone, and you see how price acted the last time it was here. All right, maybe we get some kind of reaction from here, and price stays here a little bit, and maybe goes sideways during the week. So we'll see. All right, it's weak on its own, but against the weaker currencies, will be, I'll look to short against any of the pairings with the Aussie dollar, New Zealand dollar, and the yen, because they're very, very weak. Okay, let's look at the Canadian dollar. All right, the Canadian dollar futures. You can see how weak this market is. If we just take a quick glance at the monthly. All right. Oh yeah, I forgot to mention. With the dollar, institutions are basically long. They have been long for the longest, right? And last week they added 638 long positions and closed 459 short positions. There's still majority long, and that's 80%. I mean, that's telling, right? All right, with the Swiss franc, they're 67% short. All right, they're looking for shorts, 67%. All right, they closed 2,300 long positions and also closed 3,200 short positions. All right, so you know, 67% is not, it's the majority, but not like 80% or better, you know. So, you know, there's a lot of support that price is going into on the monthly with the Swiss franc. Now, let's get back to the Canadian dollar. The COT report says that banking institutions are 64% long here, and they close 3,700 short long positions. They close those long positions, and they open 495 shorts. All right, but they took profits on the long positions. All right, what does that? What does that tell you? What does this tell you? All right, monthly. What are we doing here? All right, what did price do? Price is heading towards this low, right? We came towards that low. That's 2016. What is this one? This is the COVID low, just missing that low. All right, and here we come again. Here we come again to this low. All right, we've hit the target last week at 7,200. We hit that target. That target's done. We got a new target. This low right here. Okay, so I'm looking for more bearishness. That's it. It's that easy. It's that simple. No sense in making it harder than it is. Like drawing on this thing. Okay, so we have a new target set at 0.68200. Okay, got a new target set there, and I think we're going to get that this week. All right, let's move on. The yen futures, right? 78% of the banking institutions are short. 78%. They opened up 3,187 long positions and closed 1,043 short positions. They've added a lot of long positions here. What is that about? Huh? What is that about? All right. And they've been short. They've been short for quite a while, majority short. All right. And that's reflected in this this chart here. So they're past the major breakout area here from 2001, you know, January 2002. All right, that's a major breakout level, and we're trading below that. That's not good. All right, let's look at the weekly. We can see it's been very bearish. It's just week after week, and we have a very strong close to the week last week. All right, very bearish candle here. All right, and on the daily, very bearish. We have momentum, and we have a target down here at 0.006243. Okay, that we're running into right now. I'm letting you know that this is bullish. A bullish, what do you call it? That's a demand zone, a monthly demand zone. But I fear that we're going to eat into it. We already made contact. I'm looking for some kind of sensitivity to it, you know, a bounce at some point. But right now, all that's projected is more bearishness. Okay, this is the yen, and it's gaining momentum. That's all I want to say. Let's move on. Euro. The euro is making very nice, pretty lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, all the way down. Right? Just good price action. Clean price action. But it's not good news for that economy, right? The COT report has it at 55% long. All right, the banking institutions are 55% long. Not really telling, is it? But they did close 3,255 long positions. They closed those long positions. They added 3,000 short positions. All right. I'm looking for more shortness to come. All right. If you take a look at this price, if we just take a quick look at this price action, you can see that after the break of structure here and the swing high was made, we made the swing low, the lower low, right? Breaking structure to the downside, came back up, failed to make a higher high. All right. If we can't break the swing high, that's the job of this low. And it failed to do so. Prices come back down. All right. And we pulled up 2 days ago, right? On Thursday. Pulled up, with all that news, CPI data, and then the triggering of buy orders down here from the algorithm that caused the buying and stuff. That's what some financial analysts were saying caused that recovery. But you see the bearishness came back into the market right on Friday, right? You saw that. So I'm looking for more bearishness here, right? And I want to also point out, because the low didn't make a new high, you have to know that this becomes a target for liquidity, the same way this low became a target for liquidity. And a downtrend, all the lows are weak. They're weak lows because they can't make new highs. That is the nature of a downtrend, lower lows and lower highs. So the lows get targeted for liquidity. Hope you understand that how that dynamic works. All right, let's move on. So I'm looking for more bearishness in this market. We have a target down here at 0.95710. All right. And I think there's a good chance we see that next week. Let's move on to the Aussie dollar. Aussie dollar, very weak, right? And seemingly getting weaker. All right. We hit this target already. Look at this on the weekly. Look at this on the weekly. This is the COVID low. Okay. And we are working our way into that COVID low. All right. I believe on the monthly, that's a wick, if I'm not mistaken. Yeah, a big old wick. So we're filling the wick now. And we hit this target. We hit the target entering into a demand zone. And we didn't even get a reaction from it just yet. So there is more downward movement to come. I'm looking for further declines down to the bottom of this demand zone here. All right. So that'll be the target for next week. All right, in my opinion. And we broke market structure here to the downside. All right. And we had a little brief pull up here Thursday, and then Friday it came back down, and I'm looking for more continuation to the downside. And I would also point out it's very little wick, very little wick. It's very bearish. So when price does open up, maybe we come and test these candle lows and then come back down and continue down for the rest of the week. Let's move on. We have the pound, the British pound. All right. This one is in the same way as the euro, insofar as you see this low here, right? That's the COVID low. And we are trading well below the COVID low. All right. We came back up to test that breakout area and failed to get above it. All right. And again, if we're looking at swings, all right, it's easier to see on the weekly. All right. The lower low, the lower high, the lower low, the lower high, and then this lower, this bearish leg of structure. All right. And we pulled back to the COVID low, and looks like we found some resistance there. So it looks like I'm looking to see more bearishness to come. This is a failed a failed attempt to make a higher high. We didn't break that structure. So this bearish candle, which has a lot of volume in it, I think will be followed up with more bearishness to come. We'll move on. Oh, did I mention the COT report? I did not. I'm sorry. All right, the COT report said it's 64% short. 64% short. That's the majority. They added 6,900 long positions and closed 7,468. Interesting, isn't it? All right, that was last week. Last week, Tuesday. They added a bunch of long positions. Price went up, right? And how much you want to bet the next report we'll see some profit taking from those long positions. I can guarantee you that's what's going to happen. Let's move on. What do we have here? The New Zealand dollar. This is the last one. All right, the New Zealand dollar. Banking institutions are 72% short. 72% short, and that's a growing number. All right. They closed 3,072 long positions, closed those long positions, opened 1,900 short positions. And we are moving short. They took profit on the longs. Am I right? Yeah, they took profit on the longs and adding shorts. Okay. We got a target set at 0.54610. Very bearish market. There is no mistake in that. Okay. Here's the COVID low. That is the new target. We're almost there. And we should have another target beyond this, honestly. But we'll see how the candles fall. All right. Once we hit the target, once we hit the target, I'll update our target list. All right, we could hit that pretty soon, but you see how choppy it is getting here, right? There was a nice precipitous drop here, and we lost a little momentum, and it looks like we may be starting to pick that back up. So we'll see how it goes. All right, that's it. You see how the markets are individually, what their actual strength and weakness actually looks like on the chart by itself, right? And I will tell you again, these are going to be my focus this week. As far as the FX pairs go, US dollar yen, NZD USD, Aussie USD, Swiss yen, NZD Swiss, Aussie Swiss, pound USD, euro USD. I'm always going to take a look at those, and I might get to Bitcoin as well. All right, those will be the ones of interest. I will look at others, of course, and if you have a request, just send it in to me. Hit me up, leave it in the comment section, or leave it in the chat. I will see you in the next video. Thank you for watching.